mind, let me also bring on board Rajesh Palvia of Axis Securities into this conversation. Rajesh, I'll come to you in just a minute. Just carrying that point forward, Aditya, I'm just looking at the list of top management within Kotak right now, and Anup Saha really stands out. And he has been groomed by, of course, the Bajaj Finance management team, which obviously places good favor in terms of the Kotak succession planning if he were to be made or elevated at some point of time. Do you think that is one of the lowest hanging fruit and could well be something that the street takes favorably if it were to come through?
What is really happening in Kotak is ever since Mr. Kotak left, the Uday Kotak premium has deteriorated, and the market has not been able to trust somebody else in order to give the valuation that it did when Uday Kotak was there. So we've seen a serial derating of Kotak Mahindra Bank stock over the period of last 5 years. So from my perspective, what the market will see is a good leader and a good leader at least for the next 5 to 7 years, where the market understands what the strategy is, how the bank will control the NPAs, and what the growth would look like. So from my perspective, Anup Saha, and there are many others within Kotak who have the ability to lead Kotak, subject to the regulator approving this. So from my perspective, as I said, clarity is something is one of the biggest factors that will lead to stock price returns for Kotak, and that's what I will be looking for in the results tomorrow.
Aditya, I have to draw your attention to PNB and other PSU banks as well. And, the broader expectation is that they're likely to see relatively subdued growth as compared to their private peers. Would you say that this is just seasonal, or would you say that there is a structural gap, so to speak, now within what PSUs may deliver as opposed to the private banking majors?
No, I don't think that growth is a major challenge either for PSU banks or private banks. We've about 13% loan growth, which is fair enough given the size of Union Bank. From my perspective, loan growth will be pretty strong. Deposit growth is where a little bit of challenges. We saw Union Bank just report a 5% deposit growth. Still, brand for all PSU banks is really very strong, so that should not be a major hindrance from there for them for loan for deposit growth. And after that, slippages are at a multi-year low, so that should also not be a problem. What the major challenge for PSU banks as well as private bank is how long can they sustain this performance of very low NPAs and very good loan growth. At some point in time, this will break and NPAs will start to mount for all of these companies. So from my perspective, that is something to watch out for over the period of next 2 to 4 quarters. But all of these lenders right now are in a honeymoon phase where all of them will report spectacular set of numbers, and that is why we see most of the banks up today in fact.
Rajesh, what do you make of the moves today on some of these banks? Some very, very strong moves, right? 3% on Kotak. We're seeing some decent moves even on HDFC. And this is just prior to the earnings. My understanding was positioning had become a little light in some of these banks, but these moves seem to suggest that there's confidence.
Yeah, hi, good afternoon. Yeah, definitely. So, banking is a space where, we have seen, multiple time whenever there is a dip, there is a buying interest in last couple of trading session from the lower level. Looking at the kind of, buying interest ahead of earnings, I think it clearly shows that, the street is confident enough to get, better number in this quarterly earning from the banking space. And I think the way most of the stocks like be it Federal Bank, Kotak Bank, RBL Bank, all these banks, even IndusInd Bank, all these banks are showing sign of strength on their near-term, short-term structure. It clearly shows that traders are also confident to create more positions. Bank Nifty is clearly showing a sign of strength. So I think there is further room to continue further more upside in the banking basket as Bank Nifty has already broken out the supply zone of 58,200. So I think if it continues to trade above here, we may see further more short covering to play out in banking stocks. And if I go with the technical setup, I think Federal Bank would come on the top of this setup. In fact, the kind of buying interest which we are observing in the Federal Bank, we believe that 360, 370 would be the next target. But on the large cap bank, I think Kotak Bank is also managed to give breakout of falling channel on the daily chart. And looking at the negotiation at 20-day, 50-day moving average supply zone, I think any move beyond 395 can take this stock further higher to 410 to 415 also. So Kotak Bank is also showing sign of strength on the near-term chart. At this juncture, one can buy with a stop loss of 380.
Okay, understood. All right, and what's the call on the index now, Rajesh? This move looks very solid.
So Nifty managed to give breakout of last 5 days, tight range consolidation. So and already we have witnessed, short covering in from the call writers front. So call writers have shifted their position now towards 24,400, even 24,500 kind of strike. Put writers are looking more aggressive as they have building their position at 24,200 strike. So aggressive put writing at 24,200 and 300 strike is clearly giving us sign that base is now shifting higher, and the kind of short covering we have observed, especially in last half an hour of trade, we could see further higher trajectory 24,450, where we are projecting a target for Nifty. So trail your stop loss now towards 24,200 to hold the position. We could see another 100, 150 point kind of up move in the indices. And as I already mentioned about Bank Nifty, if it's sustained above 58,200, so another up move towards 58,600 to 700, we could see for Bank Nifty also.
Draw your attention to Axis Bank because historically it's always been a mixed bag when it comes to, margins as well as the asset quality. What's your single biggest watch point when it comes to Axis's performance?
I think asset quality would be something that you would watch out for in Axis. It's been very turbulent over the period of last 4 quarters. In one of the quarters, they reported a one-time provision as well. So from my perspective, asset quality and stability in top management, there is a lot of churn. CFO from one bank is moving to another bank. That's how things are moving in all of these top banks. So from my perspective, NPAs as well as the stability in top management is something that I will look at in Axis Bank figure.
Uh, Aditya, I'm trying to understand among these top four private sector banks, where is risk reward the best? Because ICICI has always been the one standout candidate in terms of earnings, always surprising on the upside. So, but also trades at a slightly premium valuation. If an investor were to position himself medium term, not from a result perspective, but medium term, where does risk reward look the best?
So there are a couple of aspects to it. If you look at growth stocks, if you're just purely looking from a growth perspective, then SBI and ICICI Bank would be the top picks. At least 2 to 4 quarters still of this dream run for all of these lenders will continue. So from a growth perspective, those two will do extremely well. From a value perspective, Kotak and HDFC Bank will be the ones which you have to look out for. But both of them have their own unique challenges, as I said. HDFC Bank, too much problem, too much in the limelight for all the wrong reasons, and the NIM problem that they've got. Kotak, with respect to the management, as I said. So you have to categorize it that way. Only long-term investors who have the ability to stay in the stock for at least 3 to 5 years with small returns should invest in HDFC and Kotak. Otherwise, you should stick to ICICI Bank or an SBI.
Okay, Aditya, great to have you on the show as always, and we'll meet again once all these numbers are behind us to analyze. Good having you on the show. Okay, let's move on. JSW Steel just came out with its numbers, as did Havells. So we'll analyze both those numbers. There's something about Zepto IPO valuation as well. We'll address that. But look at a federal bank right now that's really shot up and it's now holding on to a gain of about almost 6% after its numbers came in. Kalyan Jewellers, we've been talking about all through this week about this mega move on this stock. It's another 4.5% up in the green for Kalyan Jewellers. Look at Bharat Forge, and yes, Kotak Bank is going extremely strong into its earnings, a solid 3% of a move coming in there. GVT&D, Nalco, Power India, Polycab, KEI, that's where you're seeing red ticks in today's trading session. But Ashesha is here with that quick analysis on how JSW Steel's performance has been. Ashesha?
Yes, on the first look, it clearly looks better than what we were working with. Now, remember, on the top line front, a revenue figure that ET Now poll suggested stood at about 44,200 crores, and it has come in at a solid 47,370 crores. So it's a beat as far as revenue is concerned, and a solid 9% growth is what the company has reported on a year-on-year basis. EBITDA, meanwhile, at about 9,400 crores, again a beat as compared to ET Now poll of about 8,300 crores. Margins, meanwhile, have come in at 19.8% versus expectations of 18.8%, and we also have profit after tax, which has come in better than what the street was working with. Now remember, steel prices have risen on a sequential basis, and that is what aided numbers, at least on the top line front. Of course, volumes is something that we will have to watch out for. The company had already reported its production volume number earlier, and that reported flat growth on a sequential basis. So yes, volume is one internal that we will watch out for, but on the top line and the top four numbers suggest that it's a clear beat as compared to street expectations.
Ashesha, I mean, I remember having this small chat with you on JSW Steel, and you suggested that volume was much better than anticipated, which you just mentioned. If one were to adjust for volumes and prices have remained as is what you were suggesting, would you say that the beat versus what we were penciling in and not the consensus estimates, is this also a beat versus that, or would you say that it's largely in line with what we were speaking about earlier?
Yes. So Harsh, what had happened is the street was penciling in a volume decline this time around, but company later reported its production numbers, which were flat on a sequential basis, and hence if we compare the numbers with street expectations, it was anyway expected to be a beat as compared to street expectations, and that's how it has come in. Now it is difficult to quantify the extent of beat if we strip off the impact of production volume growth that the company reported after most of the consensus estimates came in. But for now, it looks like a good set, at least as compared to expectations, and the stock is also reacting positively.
Right. Okay. Thank you so much for that, Ashesha. Rajesh, JSW Steel on charts. Of course, you're seeing a bit of volatility last few minutes, but otherwise.
So after the corrective move, now stock is trying to make a base at around 1220 kind of zone, which is very important for this near-term setup. If at all stock breaks below 1220, 1215 level, I think we could see furthermore profit taking here. Stock is attempting to give breakout about 20-day moving average, which is placed at around 1240, 1250 zone. Any breakout about 1250 can take this stock further higher, but I think there is some volatility based on the number has just came. So I think let the volatility to settle down. The levels to watch is 1215 on the downside and 1250 on the higher side. Either side breakout or breakdown will decide the major direction.
Right. Okay. Zepto IPO, that's also the big talking point this afternoon, and it seems that it could be facing a hurdle as the street is now concerned over its valuations amid rising competition and questions over profitability as well. Snehi is here to tell us what exactly is the update on its street debut.
Well, absolutely. So if you take a look at all the buzz around the Zepto IPO, basis the latest fundraising that Zepto had secured from Motilal Oswal and some other participants back in October of 2025, that fundraising to the tune of $450 million valued the company at north of $7 billion. What we are now understanding from Bloomberg is that Zepto is seeking a valuation for its IPO much below the $7 billion level, and there are concerns about the cash burn that the company is doing, and that has slightly tempered the optimism that was prevailing swirling on the street around this IPO. Sources have told Bloomberg that foreign investors have indicated an interest at a pre-money valuation of just $4.5 billion, and some domestic institutional investors are valuing the company anywhere between $3 to $3.5 billion. If you compare it with that $7 billion valuation where the fundraising took place, this is exactly half from there. So we can expect to look at a reduction in the size of the IPO or lower subscription levels than compared to earlier on the institutional side. So that $450 million amount, the investors were General Catalyst and CalPERS, and this valued the company at around $7.3 billion. Basis this valuation, the math that we had done back of the envelope calculation indicated that Zepto's implied market cap on listing at 52.5 rupees per share would give it a market cap of 73,108 rupees. What we are understanding is that the shares of Zepto are currently in the unlisted space trading at 39 rupees a share, and that is giving the company a market cap of just 49,200 crores. That's a sharp correction of about 25% from where we were penciling in the market cap of Zepto to be as and when it listed. Just to bring you up to speed, it's a fresh issue plus OFS combination IPO. Fresh issue worth 8,110 crores, OFS up to 11.34 crore shares, wherein the promoters Adit Palisha and Cavalier Vora, they are not selling any stake. So that's the latest on Zepto, and yes, we're expecting to see a valuation trim down basis whatever we are picking up from agencies.
Okay, thank you for that, Sneh. Rajesh, very quickly, I want to quiz you on the two competitors of Zepto, both Eternal as well as Swiggy. Swiggy, in fact, both stocks have rallied very well last 3 months, but there's been over the last maybe a couple of weeks, you've seen a sharp outperformance in Swiggy versus Eternal. Talk to us about how both of these are looking on charts. How should one play?
So definitely both stock have done well in last couple of week. If I go with the Swiggy structure, Swiggy was in downtrend, but the kind of buying interest which we have observed from the lower level, stock managed to give breakout of falling channel on a weekly chart and sustaining about to the breakout level. Looking at the strength on the near-term chart, we believe that if it's sustained above 270 mark, I think another leg of up move we could witness in near-term perspective, possible upside towards 285, 290, we may see on the near-term perspective. But Eternal is also showing sign of strength. This is the fourth consecutive month where stock is, making a higher ILO formation. So that's the sign of sustained buying action taking place in this counter also. So I think Eternal structure is slightly better if I compare with the medium term structure for both the stock. So Eternal may extend its gain. 300 to 310 would be the next target. Buy and accumulate would be the strategy. Those who are positional trader, they can buy and accumulate. On the downside, 270 needs to keep as a stop loss.
Okay, on that note, let's take a very quick break. When we come back, we'll continue our market discussion with Rajesh Palvia.